My name is Anita T. Most people don't even know me anymore. They just know the Tax Divas. I've been in private practice for over 35 years. I went and graduated from Drexel University as an undergraduate, so I'm right here from the West Philadelphia area. Worked with Price Waterhouse. Right out of college. Well, actually as an intern and then out of college. And always with the goal of starting my own practice.
Okay.
I wanted to start my practice at the age of 30. My husband had me wait another year until my youngest was in school. Mm-hmm. But I've been in private practice now for well over 35 years, serving the Philadelphia and surrounding counties, small businesses, individuals, and nonprofit organizations, So it's a passion of mine. I really enjoy helping folks.
Yep.
And, they call us the Tax Divas because, we really try to help our clients, keep more of what they earn in their pocket.
And that is the idea.
That's the idea.
That is the idea. One of the things that we know here is that people filing their personal taxes may be kind of happy this time of the year. Mm-hmm. But anybody that has any type of business usually gets a little tight this time of year. Mm-hmm. And it's in large part because they haven't planned properly. Right. So I wanted to start by asking you the question, what is the difference between tax planning and tax filing? And how should businesses engage in each activity?
Okay. So we know tax is not going away. And taxes is really a year-round process.
Yes.
So as business owners, we're so busy hustling and bustling and trying to keep the business going. But we really, really need to have good record keeping in order. Because the reason we pay too much in taxes is because we don't have the record keeping in order. The record keeping needs to be real time, not at the end of the year.
Yep.
It needs to be real time so that you can look at your numbers on an ongoing basis to see, are you achieving your goals? What was your goal for the year? Or do you have money to make your estimated payments? Is there any tax planning strategies that we can take? Do I buy equipment at this time or lease equipment so I can get a bigger deduction? So tax planning is really a year-round process that we should be doing all year long. We really shouldn't have these surprises in January at tax time. You really need to know your numbers. We always talk about know your numbers. It's the same. Exactly. It's the same is true with the business, not just with our health but with the business. We need to know our numbers all the time so you can make better business decisions.
Yep. I agree. So can you tell me a little bit about some of the misconceptions about business tax filing?
Oh, gosh. Well, first of all, there used to be this myth that, home office deduction was a red flag. And at one time it used to be, but not anymore.
No way. It can't be today.
It can't be today. First of all, they can't audit everybody because staff is so short at the IRS. But more importantly, ever since COVID, more people are working from home, so it's really not a red flag like it used to be. Unless you're being, pretty aggressive, like if, your deductions exceed your income and, if you're taking more deductions than you really should be, it could be a red flag.
Okay.
But generally speaking, home office deduction is a very valuable tool that most of our businesses can take advantage of. Sole proprietors, partnerships. S Corps and C Corps cannot take advantage of the home office deduction. That's a misconception because they come in and they be like, I work out of my home. Well, if you're an S Corp, a corporation, you can't take advantage of the home office deduction. So that's a big one. Another big one is business owners feel that if they file an extension to file their taxes later in the year, that it also extends them paying their taxes.
Yes.
And that's surprise. You can file an extension to get your paperwork in order, but if you think you're going to owe money, you have to pay it by the due date.
Yep.
And that is either March 15th for partnerships and S Corps or April 18th, but normally the 15th for, C Corps and sole proprietors. So, extensions do not extend the time to pay taxes. And if you don't make those payments, and yes, you're going to be hit with interest and penalties. And the penalty can be up to 25% because it's 5% per month for the first 5 months.
So you're saying if you don't pay your quarterly taxes.
I'm saying if you don't pay, if your taxes aren't paid
on the day
by the due date of the return,
then you're paying a significant penalty.
Yes.
Okay.
Yes.
Got it.
And interest.
Got it.
Until it's paid in full. So we got to make sure that, if you think you're going to owe, pay something in by the due date of the return.
Yes.
Mm-hmm.
Yes. Can you tell me about some of the things that trip business owners up when they're presenting their documents to their accountant, when they're choosing an accountant, when they're trying to think of things that they should include in their deductions? What are some of the common trip ups that businesses experience when they are filing their taxes?
Well, let's start with finding an accountant.
Yes.
A lot of times we go with our trusted friends or family members, but really when you're looking for an accountant, you need to look for someone who's experienced in your type of business.
Yes.
So that you know that you're getting the best advice. Someone who's, been around the block a few times, that can really, really help you. So, to just be wise, in choosing an accountant.
Yeah, we tell businesses all the time that you should really find an accountant that specializes in what it is you do, especially, in your industry.
Right.
If you're a construction business, you should find somebody that is a construction accountant.
Right.
If you have, a restaurant business, you should find somebody that has experience with restaurants.
Yep. Exactly. So that right off the bat trips people up because if the accountant really doesn't know your business and your industry, then you may be leaving a lot of dollars on the table, or you may just be messing up. Other areas is a lot of partnerships, sole proprietors, they don't realize that they have to pay self-employment tax. And that trips them up at tax time. When they get that big bill, not only are they paying federal income tax and state income tax and local income tax, but they have to pay that self-employment tax, which is essentially Social Security. And it's a flat 15.3%. That's a big hit.
Yeah, of their income.
Of their income. So that trips a lot of them. They really need to be familiar with all the taxes that they're going to be, liable for so that they can be prepared for them. So that trips them up at tax time. Also, a lot of folks think that because they're LLC, it enables them to take a whole lot more deductions. And, the deductions, they're pretty standard across the board for everyone. So there's not, right. It's not like you're going to get a whole lot of tax benefit from being a sole proprietor or LLC or, it's pretty much the same across the board. The IRS kind of, narrowed the scope some years ago.
Businesses? Are you listening, businesses?
Yeah. So, and the other things that trip people up is that, they incorporate as an LLC, but they really don't understand what that means.
Absolutely. Can you go into that, please?
So yes, you incorporate, and one of the primary reasons people incorporate is to limit their liability, and that's great. But you need to understand how it impacts you from a tax standpoint. So as an LLC, if you're a single member LLC, then you're automatically treated like a sole proprietor.
Right.
You're going to be taxed as if you're unincorporated. If you're a multi-member LLC, that means there's more than one owner of the business, then you're automatically going to be treated like a partnership and have to file partnership returns.
Yes.
You can make an election, to be an S Corp or a C Corp. C Corp is probably not appropriate for many new small
businesses, right?
But you can elect S Corp status. But if you elect S Corp status, you need to understand that now you're an employee of the corporation. You have to go on payroll, and receive a paycheck. So this is an area that really, really most people, they just incorporate.
Yep.
They go somewhere and get
or file do it online.
Do it online.
Yes.
Without really understanding, the implications and whether it's the best strategy for them, or do you need to do it right now, or
Yeah. This is oftentimes why we share with our entrepreneurs that. The cheap way is not always the best way because you're going to end up paying good money after bad money.
Right.
So, yeah. Is there such a thing as keeping too many receipts? So I'll tell you, during like PPP, we had entrepreneurs come in with boxes of receipts because they did not have... they didn't have the equipment to scan and do things. But from an accountant's perspective, can you keep too many receipts? Can you tell us about receipt keeping and how that factors into filing your taxes.
Right. Record keeping is so important. Okay, let's just start right there. It's very important. And then we talked about it should be real time. So we're not waiting until the end of the year, to kind of pull our books and records together. But you need to make sure that you have documentation to support your record keeping.
Yes.
Support your financial statements. And yes, a good scanner or something like that you can, scan and just have those documents. You just want to make sure that you have a system in place to keep the important documents, especially things like, purchasing equipment, payroll, your income, sales tax records, just keeping those important things. There's some things that the IRS really don't even care that you don't have the records, like maybe meals. And, if your meals are under $75, the IRS is not even looking, because they know they get the little teeny pieces of paper.
Yes.
So, some of those, there's certain expenses that you don't even need receipts. But you do need to make sure you have a clean audit trail. Make sure that you can support the deductions that you have on your tax return. And a good, like I say, there's so many different softwares and tools out there where you can scan those records in, so you don't have a whole, not bringing a box of receipts and papers. But yeah, I sit my clients in the conference room and I'm like, well, you go through in category.
Yes.
It's just a waste of time, when you just throwing that stuff in a box.
Yeah, my husband has a business and he unfortunately waits. And he's at the end of the year going through bank statements, categorizing expenses, pulling receipts in the right piles. And so I'm hoping that he'll listen to this podcast and that he will comply as well. Because, like you said, businesses are really busy running their business. But you really, really have to take some time and pay attention to the back end of the business. And especially tax planning and tax filing, because this is a critical, it's of critical importance for small businesses.
Well, first of all, you can't even, make good business decisions.
Yes.
Unless you know your numbers and, and have a good handle on your business. And so it is so important. You'll be able to run much more efficiently if you do that.
Exactly. So you talked about quarterly filings. Can you share a little bit about that and how important is it to file on a quarterly basis? And what happens if you don't file on a quarterly basis?
Well, let's talk about what it means, first of all. So the tax system is on a pay-as-you-go system.
Right.
So if you think about it as an employee, they withhold them taxes every payday, and they send them to the appropriate regulatory agency. So, to take the burden off of self-employed or small business owners, they make you or require that you file quarterly estimated payments. So you don't have to do it every time you get a check. But quarterly, they expect you to summarize your results, your income and expenses, determine what your tax burden is going to be, and make quarterly estimated payments.
Right.
And that's real important because, at the end of the day, like we talked about, or maybe we didn't talk about, but you have to be 90% paid in by the due date of the return. And so when you file your tax return, your return actually determines that if you made quarterly estimated payments appropriately.
Right.
And if you didn't, then you get hit with interest and penalties for not making them. They call it underpayment penalty. They have a penalty for everything.
Yes.
And that's called underpayment tax penalty if you're not making those quarterly estimated payments. Plus, it lightens the burden, at tax time. If you have 90% paid in or 100% paid in or 110% paid in, then you don't have to worry about trying to gather up all that money at tax time. So it is very, very important that you try to comply with those regulatory requirements. And it's just not the IRS, it's the IRS and the state. And the city, they make you prepay when you file your tax return. So, that's already paid.
And that's a
big burden.
And it's so many businesses do not like that. But it is what it is.
It is what it is. They want to get theirs up front.
They are. They are. So tell me this, how do you handle getting W-2s and 1099s as a business out to folks and to other businesses on time? And what is that process about? So share a little bit about that.
Yeah. So let me say this first, and hopefully everybody hears me, but payroll taxes are considered trust fund taxes, which means that the penalties are stiff for not complying. Okay. Now, when I say trust fund taxes, the IRS's position is that it's not your money.
Right.
It's your employees' money.
Right.
And your employee is entrusting you to turn it over to the regulatory agencies so that when they file their taxes, they're in good standing. So that's the first thing and key that you have to understand. It's not your money. It's the employee's money. And they're entrusting you. That's why they're called trust fund taxes.
Trust fund taxes.
To pay that money in on a timely basis. And if you don't, the penalties are just stiff. A lot of businesses are shut down because they're not in compliance with payroll, and they have these huge payroll debts, and they, the IRS just ends up shutting them down because they can't comply.
Are you listening, businesses? Are you listening, businesses?
And so, from my own experience, my own personal experience, when you go into business, a lot of people in their head, they want to become an employer, I don't know what that is. But it's a big cost. It's an added cost to the business. Yeah. So, don't bring on employees until you're really ready.
Yes.
Because in addition to, their salary and withholding their taxes and remitting them on a timely basis, you also have to match Social Security and Medicare, pay into unemployment, pay into workman's comp.
Yes. The workman's comp is something else.
Exactly. So depending on your industry, that's a big tax burden. So you really, really need to make sure you think through that process. But compliance is key. Payroll tax reporting is quarterly. You file your quarterly payroll tax reports, but you have to remit those taxes. Some folks on a weekly basis, depending on how large your payroll is, sometimes biweekly. Some people may get away with monthly, but those payroll taxes have to be remitted on a timely basis. Or, again, you get hit with interest and penalties. And then at the end of the year, you got to make sure you do those W-2s, get them to the employees, or, the 1099s for contractors, get them to them by the 31st. And then get them to the IRS by the February 28th. So it is a huge, huge tax burden as well as a compliance filing issue.
Now, since we're on this topic, can you share a little bit about whether you want a 1099, whether you have a 1099, or whether you have an employee? Because we have folks that need employees, that tell employees what time to come, that give them equipment, but they still have them on record as a 1099. And so, can you share a little bit about that and what happens if it's found that that's not the case?
Right. So the IRS has these rules about who's an employee and who's an independent contractor. And generally speaking, an employee is someone who is under your direction and control. You set their hours, you provide their supplies, their equipment, tell them what to do. They're not self-employed or independent where they can say, well, I'm not coming today, I'm going to send my son or something.
Right.
You're the employee.
Yes.
So, the IRS takes that position that you're an employee. And you should be withholding taxes, remitting taxes, as opposed to an independent contractor. You're thinking of someone who is self-employed, who's in business for themselves, who are not necessarily under your direction and control. You might have a set schedule on when they come, but they're not necessarily under direction and control. Like, if you hired me or my firm, I might be sending one of my staff members. So an independent contractor is someone that's usually more self-employed and they hold themselves out as a contractor.
Is there a checklist or some place that people can go to see, to test themselves, to see, is this person truly an employee or are they a contractor?
Right. The IRS has this 7 common law guideline. So you can just go to the IRS
website. Okay.
And, they have a tool there, and they call it the 7 Common Law. I think it's 7. Lost track. Guidelines where you can kind of go through the list and determine whether your workers are employees or independent contractors. And again, if you the worst case scenario is that if you get audited and the IRS says, you're treating these as contractors, but they should be employees, the IRS is going to hold you responsible for the taxes that should have been withheld.
Yes.
From that worker's pay.
Yeah.
So
and
that
is there penalties on that?
And penalties for not filing them on a timely basis. So that is, where and then for organizations that have board members and they can be held liable as well.
Because the board has fiduciary.
They have a fiduciary responsibility to make sure. So if you have a board or they could be held responsible for those taxes as well.
So we're just having a conversation here for all the listeners. Do you have anything that you want to share with the listeners about tax filing in general, about business, and about your business?
Okay, well, one of the things I want, it is tax time.
Yes, it is.
And I think some of our businesses are still confused about when their returns are due. So if you are a partnership or S Corp, your tax return is due March 15th. If you're a sole proprietor or filing as a C corporation, then your tax return is this year is due April 18th. It's normally April 15th, but because of some holidays, it is April 18th. And if you don't believe you can file by the deadline, make sure you file an extension, Form 7004 for, the businesses and the corporations, and Form 4868 for the sole proprietors. So, there's just still a lot of confusion because the IRS did just change that law a few years ago. The tax filing deadlines for the different types of entities. Also, I want you to remember that cash is king. No cash, no business.
That's right.
Cash is king, and, which is really why you need to have good record keeping, cash flow management, what's coming in, what's going out, what's due next month. Cash flow management is so important because, again, cash is king and no cash, no business. So that's really important. Our small businesses really need to get out of the habit of mixing personal and business expenses.
Amen.
So we really need to do that, set up a separate business account, have a separate business credit card, and use them, for business purposes. If you need to put money in a business, deposit it into the account.
Yes.
Try not to commingle business and personal. It's very hard at tax time, to separate those and a lot of times you're leaving money on the table because you don't have good records.
Yeah.
So record keeping is so key. And there's so many tools out there. There's so many professionals out there that can assist you in that area. As an accountant, we always feel like, they don't appreciate what we do. And I think,
if they don't appreciate it, they're going to find out.
They're going to find out that they can't
mess around and find out, as they say, right?
So they really, really need to, really think about that as there's somebody on their team to help them achieve their goals, minimize their taxes, and, take advantage of everything that is available to them. Because as a small business owner, you're trying to run a business, you can't know it all.
Yep.
So, definitely... So that's real important. The other thing that's real important is, is to think about yourself and to get, to factor into your business plan and your cash flow benefits for yourself, whether it's disability benefits, life insurance, retirement planning. We think we're going to live forever when we're business owners, but, you never know when, you're going to be put down and have to... And you need that disability insurance policy to kick in to carry you for a while. So we really need to think about, paying ourselves and the benefits that we need to sustain ourselves and our family. That's something that really needs to be factored in right from the get-go. And succession planning is important. You know, it really is important.
Because at some time, you may not want to
yes.
do your business, but you may want your business to still
the
live
legacy.
on.
Exactly.
That's right.
I have seen so many businesses close because, you know, the parents thinking their kids are going to want to take it over, you know.
They don't want to take
and
it over.
They don't want it, you know. So you really need to think about succession planning. And are you just going to close, you know, the business is going to just close when you decide or to sit down, or do you want some kind of legacy to live on? You're going to be able to sell the business. If you want to sell the business, what do you got to put in place so that you can sell it?
Yep.
You know, has some value. So succession planning is important too. We don't think about that as business owners until, you know, it's right in front of your face, whether it's, you know, something that you just forced to do.
Yep.
Or, you know, it's at the time where, you know, it's like, I have to retire.
Yep.
So that is very, very important. But one of the most important things that I really want to stress before we get off the air here is that the 1099K issue. So, you know, the IRS established a new rule where, you know, Cash App, whatever it is that you're utilizing, you know, now have to issue you a 1099.
Yes.
If they pay you $600 or more.
Now, I've heard that they changed that. They didn't change it, or they did change it?
They did change it. It was supposed to go in effect for 2022.
But now it's going for 2023.
And now it's going for 2023.
Okay.
So I just want everyone, you know, this year we're going back to record keeping.
Yep.
Get your records in order, you know, because you're going to be getting those 1099s. And you may get some, may have gotten some this year because some of the organizations had it already in the cycle.
Yeah.
Before the IRS decided to extend it in one more year. So, you know, be sure to report your income.
Yep.
The IRS has a matching program. They match what you have on your return to the 1099s, the third-party information they get, you know, from, you know, everyone who's paid you. So you want to make sure that you report your income, track your income, and report it, because that is a big red flag. Yeah. If the IRS finds discrepancies, you know, if they find that it's just a mistake, you might just get a 20% penalty. If they believe that it was intentional, your penalty is going to be 75% of what your tax should be.
Wow.
So record keeping. Keep track of that income. And for those of you who are really not in business and just get money from your family and friends, you go out to dinner or something like that, you know, you know, make sure you have a personal account, not a business account. Yeah. Because you may get a 1099 too.
Yeah, that's that. Oh, I didn't even think about that. Yep. Because there are people that have hobbies.
Yes.
Very true.
Yeah.
So can you give us some information about the Tax Divas, and if they want to, if businesses want to reach out to you, do business with you, what should they do?
We make it very easy for you. Okay. So you can call the office and just let us know what your needs are. And if it's tax preparation, you know, we are, you know, there's lots of ways you can get your information to us. You know, you can drop it off. We can send you a secure portal so you can upload your information. Email, mail it. There's lots of ways you can get your information to us. I have a staff of 10 professionals, so, you know, we are certainly have the capacity, you know, to work on your stuff. And we like to think of ourselves as part of your team, you know. So as a part of the tax planning process, we are looking for opportunities, you know, for you to, you know, minimize your taxes. If not for the current year, but going forward, just giving you some tidbits on what to do. And we are a full service in the sense that we are CPAs and financial advisors. So, you know, we not only do taxes, we also do record keeping, and we also do financial planning, insurance and investments. So if you're ready to set up those retirement accounts or disability.
I didn't know you did that.
Yeah. I'm a CFP and I have my securities licenses. There's 3 of us in the office.
Okay.
So we, you know, so we try to make sure that we're full service for the small business owner and individuals.
Absolutely.
Yes, because we, you know, there's a market out there that's not being well served, and we're trying to fill that gap.
Well, I want to thank you for coming out. Like you said, I'm just gonna repeat: cash is king. Your accountant should be part of your team. They shouldn't be kind of off to the side. They should be incorporated into the DNA of your enterprise. So again, thank you for coming out. And if anybody wants to reach out to Anita and her company, the Tax Diva, she's given you her information. So thank you very, very much.
Yes, and they can just go on to taxdivas.net.
Taxdivas.net.
And there's a tab there that says Ask Anita. Feel free to ask me any questions.
Okay. All right. Well, thank you very much.